Management of Whirlpool India, the case for a chat here being they're expanding their cooking appliance portfolio. Double-digit volume growth is what the market is expecting for them. Is that their target? We'll quiz them in a bit. And of course, competition is to pressurize margins further. That's what the market is worried about at this juncture. So let's touch base with Sunil A. D'Souza, who's Managing Director of Whirlpool India. Sunil, it's great to have you on the show. Thanks very much for taking out the time. First up, you plan to acquire 49% stake in kitchen equipment maker Elica PB India for around 180 crores. What does this mean for your overall strategy?
So before I get into the expansion into the cooking business and the Elica PB acquisition, let me just say that Whirlpool India, we're on a strong growth momentum. If you look at the last 3 financial years, we've grown 5%, 14%, and then in 2017-18 we grew 24%. And it's not only grown the year 24%, even the last quarter, March quarter results which we declared, we've grown our top line at 24% and PAT growth also of 23% and EPS growth of 23%. So we're in a strong growth momentum. As we expand our business in this country, we always look at what are the options that we have on the table. We're sitting with a lot of cash, and for a long time we've got these questions from investors saying, what are you doing with the cash? We've always maintained that we've got, I would say broadly in my mind, 3 different options for the cash that we are carrying. First of all, the cash belongs to the shareholders and we owe them a good return on the cash. I could use cash for returning into the shareholders in the form of dividends or buybacks. We could use it for organic growth, or we could drive inorganic growth. Now, we've already announced a maiden dividend last year. We again announced a dividend this year. On the organic growth front, we've got approval from the board of a 2-phase expansion in our Pune plant for refrigeration of roughly 360 crores. And then we've continuously scanned the horizon to look at inorganic opportunities. Again, on the inorganic opportunities, we've always maintained that we will not do acquisition for the sake of acquisition. We will do it as long as it complements the businesses that we have and brings synergies to the table. It brings capabilities beyond what we have, a la a brand, a technology, a network, or a team. The beauty in this acquisition is that Elica PB has built a very strong cooking business in India and is on a solid growth momentum. In terms of what it brings to the table, is it brings design abilities, it has technology, it's got local manufacturing, it's got a network which is roughly 2 to 3 times the network that we have built for cooking. It's got very strong trade relationships, and it's got a very strong operating team. So we see synergies coming out of this which we can leverage. We aim to add the Whirlpool brand to their team, and we see enough space for 2 brands to operate, both Elica and Whirlpool, because Whirlpool is in the slightly premium space compared to most of the other brands around. And therefore we see a business that we have built, the built-in cooking business, which actually has grown about 50% in the last 3 years on top line, going to a completely new trajectory by leveraging this entire set of capabilities which the Elica team brings in.
Are you sufficiently funded for the acquisition? How much is it that you had to pay for this one?
Yeah, so Whirlpool of India in cash and cash equivalents, we've been carrying about 1,500 crores on our balance sheet. Now, including, like I mentioned to you, we've been paying dividends, and we've funded for, or we planned for expansion capex, and that still leaves us enough cash. We expect this transaction to close about 162 crores, and we're completely funded from in-house cash.
Okay, give us a sense on how you're looking at protecting your margins at this point in time. I think there's concern about whether or not rising input costs and a depreciating currency would impact your operating line performance. Is that the case?
See, we've always talked about the fact that commodities rising and the rupee depreciation, in the face of the fact that quite a lot of our imports are imported, both raw material as well as components. This will put pressure on margins. We have various options in front of us to look at, including products, including moving different SKUs around. Price is one of them. All of this we've got to do while making sure that we have protected our margins as well as continue to provide value to the Indian consumer. It is all a question of how much price is the consumer willing to pay for a Whirlpool product which has got a certain set of features and benefits, and we will continue to move this. It's a constantly moving target, balancing commodity currency, making sure our product appeals to the consumer, and we continue to maintain volume and margin.
So tell us a little bit more about Sunil. Where is it that you plan to take Whirlpool in the next 1 year? Is there a rejig in the product profile that you're looking at? Any newer geographies, new product launches?
Yeah, so just before I step into that sphere, Whirlpool of India, we closed fiscal year 2017-18 at a 5,000 crore top line and a healthy 351 crores of PAT. We have set a target to become $1 billion company by year 2020. This will happen with two distinct moves. A is the current portfolio that we operate in, which is primarily based on refrigerators and washers. And in those refrigerators and washers, again, we are very strong on the mass premium, which is the middle segments. While we will continue to strengthen the middle segments, we will continue to grow both ends of the spectrum, both the premium end as well as the mass end. We've fired a considerable number of actions on those fronts, and that's why you see our top line of 24% growth, which I would think is, very good by any standards. The second piece is expanding the portfolio beyond our washers and refrigerators, in which we are very strong. We've always maintained that we will look at three different segments, which in my mind are adjacent and therefore leverage our current capabilities, and therefore will be accretive to both top line and bottom line, which is water, air and cooking. Air, we've already started making traction. Water, we've got plans, and watch this space, if I may say so. And for cooking, we've now looked at this option, which will really jump shift our portfolio. So it's portfolio expansion, both in our current as well as adjacent categories, which will drive growth for us to get to $1 billion.
Okay, that seems like a very encouraging plan. Would that mean more inorganic growth opportunities, or would you purely, with this acquisition, rest your case?
So Whirlpool of India is a cash positive company. We're sitting with cash on our balance sheet, and we keep generating cash, decent amount of cash every quarter. As I said, we always have different options for that cash, and the cash belongs to the shareholders. We constantly scan the horizons, and if we find something which is really interesting and makes sense on adding shareholder value, we will always take it out to the board. As of now, there's nothing on the table, but as and when things emerge, and they emerge all the time, we will evaluate it and we will get back.
Okay, fair point. As a strategy, Sunil, just wanted to understand, because you're pushing pretty aggressively in the Indian market at a time when Chinese durables as well are growing very, very strongly and penetrating quite deep. How is it that you're dealing with pressure from China, and how are you managing to maintain a strong foothold here in the country?
Competition is a reality in our business, and competition in my mind keeps everyone honest and provides best value to the consumer. We've always dealt with competition. We've been in this country for about 23 years now. We've built a very strong business, and we've got very strong plans for growth. We do take competition and their plays in different segments and different categories into account when we draw up our plans. As I mentioned, our plan right now is we've got gaps, or we had seen gaps in our portfolio. We're busy plugging those gaps. We see growth in India faster in the tier 2, tier 3 towns, as this is a penetration market with very low levels of penetration for durables, and that is where we see faster growth happening. So we're expanding our geographic footprint. We are executing better on the shop floor. We're leveraging technology to make our supply chains more effective. We're putting stronger processes in play for balancing this commodity currency pressures all the time. So if you ask me, I think we've thought through a fair number of variables. Of course, there will be those wild ones which will always come from time to time, which you have to tackle. But for what we see today, what we know today, and what we can forecast today, I think we built a fairly strong plan. And the key now is to execute those plans to the T. I would dare say that we've got quite a strong team on the execution front, and we've taken execution on the shop floors to a different level in the last 2 years or so.
All right, Mr. D'Souza, we leave it at that. Thanks very much for taking out the time to speak with us this morning and sharing with us details about your business plans. We wish you the very best for the future.
Thank you.